Hey y'all, Mike back here with another stock strategy explained, and today we're going to be talking about the Affirm IPO and whether you should be looking at their IPO and investing. And before we begin, make sure you affirm that like button down below because that'll really help my channel out. And make sure you subscribe for more future updates on stock analysis and IPOs. And just a quick disclaimer, this is not legal, tax, financial, or investment advice. Make sure you do your own research before you do any sort of investing. I am not a financial advisor. And with that, let's get right into the Affirm IPO and take a look at their S1. So first up, let's take a look at what Affirm is and what products they offer. So the TLDR of Affirm is they're pretty much a loan-based company that gives out consumer loans for expensive internet purchase transactions. Their biggest product here is something called integrated checkout, which means that when you land on a checkout page for a merchant, you'll actually see a little button that says pay with Affirm. And what that will basically give you is a 0% interest loan if you're well qualified for a expensive purchase, like let's say a Peloton or a big order of clothes. So this is actually really important for a consumer because if I see a 0% interest loan for something like a Peloton, which costs well over $2,000, I'm more likely to be able to afford that month over month rather than paying a upfront $2,000 fee to Peloton. This is actually part of a new market called Buy Now, Pay Later. And this is a very big market that's growing in Europe and in Asia and now starting to come to America with companies like Affirm. So the other thing to note here is that merchants love this integrated checkout and they love the 0% APR for customers. So the big reason for this is merchants get their money upfront, customers get their product and a payment schedule that works for them, and the merchants don't take on any risk. They still get all of their money up front. So taking a look at Peloton, if I buy a $2,000 bike from Peloton, what actually happens is I check out with Affirm. Affirm gives Peloton about $2,000 or however much the final price is, and I pay Affirm on a monthly basis, and Peloton will pay Affirm a small fee from that transaction. So it's a win-win-win for everybody because without that payment plan, I might not consider buying that Peloton anymore. So the strategy here really is enabling customers to buy products when they want on their schedule. You can see that merchants really love it because if I'm questioning a $2,000 purchase because I don't have that money in hand, that might actually prevent me from transacting with Peloton and then Peloton won't get money, right? And so the interesting thing to note here is that merchants love this because it enables them to still get their money and still get a product to customers without really figuring out when the customer fully has all the money ready. Merchants love Affirm and these loans because it's helping customers buy the product now, which really helps merchants sell more products. The other thing to note here is that not all of Affirm's loans are 0% APR. It's only 0% if you're a well-qualified buyer. If you're not, then they'll charge something called a simple interest, which means no compounding interest, but they can still charge you some interest and still make money off of that. The other few products to look at is they also now have a savings account and they also have something called a virtual card to really help you protect your privacy. So instead of entering in your real, Chase credit card, you can enter in something called a virtual credit card from Affirm and that will help you transact privately. The other product they have is something called a marketplace, which really allows you to see all of the merchants and all of the products that you could possibly buy with Affirm and ultimately transact with Affirm quickly. And so it really is an app that's kind of like Amazon, but really shows you Affirm's merchants and Affirm's products. So now let's quickly take a look at their product strategy, which I think is actually very important and a little nuanced. So the interesting thing to note here is that a merchant will actually pay Affirm a portion of the transaction or a fee for every transaction, including on these 0% loans. And the reason why is that merchants see that when they offer these buy now, pay later loans, it increases both the number of transactions. So again, like I said, when I see a buy now, pay later loan as a customer, I'm more inclined to buy because I know that I don't need that $2,000 in hand to buy that Peloton. And the second thing is it increases the average order value. And what that means is my cart with Affirm is probably actually bigger in value than a customer who isn't using Affirm. And the big reason for this is, if you can imagine, if I don't need this $2,000 or $3,000 or $4,000 directly in hand to make a purchase, I feel empowered to make more purchases and pay that off later. I can pay that off on my own schedule on a monthly cadence rather than needing that money up front. So this really has me thinking, what is Affirm's strategic moat? What really differentiates themselves to customers or to merchants, and what makes them stronger with more customers and more merchants and more transactions? And to be honest, I don't quite know the answer just yet, which I think could be a negative, but could also be a positive if Affirm ever figures this out. So with transaction data and customer data, Affirm can obviously tell what a customer is buying and which merchants they're shopping at. But the interesting thing is most credit card companies and even PayPal now can do that. So I don't really think that's a huge strategic moat for Affirm. So the other thing to note here is risk modeling. In their S1, Affirm actually said they have a proprietary risk model, which they believe can help them give more 0% interest loans or even lower interest loans to customers who traditionally might not have been able to get a loan. And that's because they can clearly understand, will this customer pay me back? And they believe that with their risk model, they can more clearly define that answer. The other thing that's really interesting is loans naturally lends itself to consumer banking. And so just recently, like I said, they released a savings account. And so it seems like they might be trying to get into the fintech space, competing with Robinhood, potentially competing with Venmo, competing with Square Cash, and competing with maybe even the big banks such as Chase. But I think to summarize their moat is, I think it's unclear, and I'm really curious to see what their moat is and what their strategy is for defining that moat, both now and in the future. And the reason why I call this out is it could potentially be a risk, which we'll cover later on. And the reason is, if a firm can't figure out their unique differentiator or strategic moat, you can imagine another payment provider, let's say PayPal or even Chase Bank, could offer a similar buy now, pay later product model and a product strategy, which could definitely hurt Affirm in the long term. So now let's look at Affirm's financials and take a deep look at their revenue and their S1. The key highlight here is Affirm has been doubling their revenue year over year. In this fiscal year, they've generated over 500 million in revenue compared to 2019, where they generated 264 million. So you can see it's almost growing at 100% year over year, which is insane. And the other thing to note here is that Affirm says through September, there was 6.2 million consumers who completed about 17 million transactions across 6,500 merchants across Affirm's platform. So you can see merchants and customers are really adopting this. Over 6 million customers, which is a lot, and 6,500 merchants, which is also a lot. And you can see that they building a marketplace and an ecosystem where merchants work with Affirm and then customers also work with Affirm and everyone's happy. And the other key thing to note here is that in the last quarter, Affirm made 93 million on 1.4 billion in GMV. And so what this means is they're taking about a 6% cut of every transaction, which is a lot higher than, let's say, credit card companies like Visa or MasterCard or Amex. And so I think if they can enable more transactions, then obviously they can continue to take a huge cut of this and they can continue to make a lot of money, especially when you compare to Visa and MasterCard and Amex. But, however, the one key financial thing to note here is that although Affirm works with over 6,500 merchants, the company generates a lot of their money from Peloton specifically. If you look at the numbers, Peloton accounts for 28% of Affirm's revenue in the latest fiscal year, and Affirm's top 10 merchants account for 35% of Affirm's revenue. So you can see Affirm is very, very dependent on a few key merchants, which is a huge risk. And so the real question here is how many customers will actually adopt the buy now, pay later model? And the second big thing is how many merchants and how many products would actually benefit from a buy now, pay later model? You can imagine for a Peloton, obviously, for $2,000, a lot of people don't have that kind of cash just laying around, but they still do want a Peloton and they know that they can pay it off month over month. But you can imagine maybe, let's say, a clothing company like Levi's. They sell jeans for, let's say, 50 bucks. I probably have 50 bucks laying around and I might not want to use Affirm's 0% interest loans because, again, I can directly pay that off now. And so that really leads me to ask, what do customers normally take out loans for? And it's usually pretty large purchases that are over, let's say, $1,000. And most of the time, customers don't really buy those things online. You can imagine a big couch, You can imagine a house, you can imagine a car. Those are all really big transactions that customers might normally take a loan out for, but Affirm is really focused on e-commerce and integrating with a website's checkout button. And you can see Peloton is really the only company that kind of fits the bill for an expensive purchase that most customers will easily make online. And so that really leads me to say right now, they're over-reliant on a few key industries and definitely over-reliant on Peloton. The second big risk I see is, again, they don't really have a strategic moat, or at least one that I can see right now. I could see PayPal or even other different types of banks like Chase or a Bank of America offering similar buy now, pay later loans for 0% and integrating with a merchant's checkout page. I really don't see Affirm differentiating from PayPal. And if anything, right now, I trust the PayPal brand name more. I have a PayPal account, and it would probably be a lot easier for me to click on a PayPal button with my current account than an Affirm button where I have to sign up and give them my social security number. So because of that, I think competitors could be a very real risk for Affirm. And the last big risk that I can identify is regulations around loans, especially buy now, pay later loans. Some people might view this as predatory, and again, it's unclear what the regulatory scene is leaning towards and unclear how this market will be regulated, but I think it's still a valid risk to call out. And so this leads me to my final recommendation on if I would buy Affirm during their IPO. And I think the answer is potentially maybe, depending on their market cap. In the short term, I see a lot of upside, especially with the pandemic. A lot of people might need to take out these short-term 0% loans, and it really does help the consumer transact with merchants, especially during the pandemic. And right now, Affirm is really the only business that's giving out these 0% APR loans directly to consumers. So I think in the short term, it could make a lot of sense, especially as they're growing very, very fast. But again, in the long term, it's really unclear what Affirm's strategic moat is and what their unique differentiator is and how they'll fare against competitors. However, even with it being unclear how their long-term prospects are, I do think long-term they will continue to grow. And the big reason is I see buy now, paying later overall growing. I see room for multiple businesses to really thrive in this space. We have Afterpay in Europe. We could potentially have PayPal, and we can have Affirm. I think this market is slated to grow to over $30 billion, and I could really see Affirm taking a huge chunk of this puzzle. I really don't think it's winner take all in this market. So I think the thing here is it all depends on their price and it all depends on their market cap. If we assume that they have a 15x to 20x revenue to market cap multiple, which I think is actually a very fair multiple, it'll have anywhere from about 7 billion to potentially 15 billion in market cap. I think anywhere in that range is probably a pretty fair price. I would say 10 billion is probably around the sweet spot where I feel potentially comfortable with investing in the short to medium term. But again, it depends on their revenue multiple. Anything higher than 15 billion, I would be pretty wary of that, especially with their long-term prospects. And that just means that people are valuing the growth long-term more than anything. And so with that, we wrap up the Affirm analysis. Let me know down below in the comments. After watching this video, would you invest in Affirm? And what do you think about Affirm's company? Also, let me know down below, are there any other future companies that you want me to take a look at, whether it be a stock analysis or an IPO analysis? And make sure you subscribe for more future updates on both stocks and IPOs and the general stock market. And with that, make sure you always understand a product strategy before you invest in any sort of stock. And most importantly, make sure you make money. Peace.